Good morning and welcome once again to Digital Look TV in London. Joining us today is Sarah Emily. She is the co-manager of the JP Morgan Claverhouse Investment Trust. Miss Emily, good morning. Thank you for joining us.
Good morning. Very nice to be here.
Okay, let's see. Your investment trust over the last approximately 9-12 months has seen a huge change in its fortunes, a dramatic change. What's happened?
Well, we've had very good performance in the year to date to the end of August, and in fact to the end of September 2013. But in fact the major change happened on the 1st of March last year, 2012, when we'd had some disappointing performance in previous years, a mix of some good years, some poor years with financial crisis. And the board of directors wanted a change in strategy. They believed in the way we managed the trust, but they wanted us to take a more conviction-led approach.
Right. Can you give us some numbers? Just
Yes.
what is the degree of outperformance of your investment trust?
Well, last year to the end of December 2012, we were about 1.5% ahead of the positive index. In the first half of this year to the end of June, we were about 6.5% ahead of the benchmark index, which is the FTSE All-Share. Benefiting both from our underlying stock selection, but also being geared into a positive market. And then we had a good performance to the end of August, where the NAV was about 6.5% ahead of the benchmark, net of all fees, the 8 months to the end of August. And importantly, since the change in strategy on the 1st of March last year, it's delivered about 7.5% outperformance since then.
Perhaps if you can run us through a little bit through this new strategy of yours?
Yes, of course. Well, what happened, we went to a more conviction-led approach.
Okay.
I've been a co-manager of Claverhouse since 2006, and on the 1st of March last year my co-manager changed and William Meaden was appointed. I've actually worked with William for over a dozen years.
I see.
So he was appointed as co-manager on Claverhouse with particular responsibility for the gearing. But what that meant we did, moving to this conviction, the board gave us the objective of having between 60 and 80 stocks, whereas previously we had at some points over 100 stocks. Okay. So it's always been an actively managed UK equity portfolio, but we brought it much more conviction in our best ideas. Okay. So we did that from the 1st of March last year, and what that meant was there's a bit of restructuring in terms of when we had very small positions in stocks, it was a case of, well, either we like it, it's a conviction best idea, or there's no point it being there. So we did a bit of restructuring, and to bring it down to within the 60 to 80. And in actual fact, for the past 6 months or so, William and I, we've had about 61, 62 stocks. So we're right at the low end of that range.
Okay, when you talk about conviction ideas, that seems to be a key thing. Just what does that mean? How do you define a conviction idea? Well,
it's one of our best ideas. I mean, the way that Will and I work, we say every stock has to fight for its place in the Claverhouse portfolio. Our benchmark is the FTSE All-Share, so that's a wide universe of UK stocks. And we focused in particular on the 350, the FTSE 100 and the mid 250, looking for those stocks which really show the best attributes and characteristics that we think will lead to strong share price performance.
So you're quite exposed to the UK economy, domestic UK economy, or not?
We are, but I mean the FTSE 100 has a massive exposure to the global economy. What's actually been interesting over the last probably 18 months now is that despite all the poor news on the UK economy until very recently, you know, if you think 12, 18 months ago, everyone was worried about double dip, triple dip recession in the UK. But in actual fact, if you look at the underlying stocks in the portfolio and in the market, it's been some of the more domestically oriented stocks which have actually performed most strongly.
Indeed, you caught the wave.
Some of our winning stocks in the year to date in 2013 have been ITV, the broadcaster, which is very much a domestic stock. I mean, they've got great success in some of their programming.
You still hold ITV?
We do, yes. It's one of our biggest overweight positions.
Okay, why do you like it so much?
Well, we've liked it for some time because we saw when the new management came in a few years ago, Adam Crozier as chief exec and Archie Norman as chairman, they did a very sensible focus on cost reduction and just improving their margins, getting rid of in the businesses they didn't want, and also focusing on strengthening their actual programme and drama productions as another source of revenue.
So an emphasis on not just cost cutting, but also on quality products.
Yeah, Yes, on quality products, and also on de-gearing and focusing on cash generation. And one of the great things that ITV, I believe, has achieved. Not everyone likes all their programs, but they are selling them onto overseas markets like Downton Abbey in the US.
Right.
But what the management have done, alongside the cost control, is focusing on their cash generation. And in fact, ITV came back to the dividend list last year. And then this year, when they announced their full year 12 results in early 2013, they did a very strong increase in their dividend. It was over 60% growth year on year.
Huge.
Obviously from a low starting point, because they only came back to the list last year. But they also generated a 4p special dividend to shareholders.
Okay.
So you're getting strong profit growth, profit improvement, but also their focus on cash generation has led to good income streams for their shareholders.
Okay, what other sectors is your investment trust present in?
Well, it is a risk-controlled, actively managed investment trust, Claverhouse. So we have stock limits. We can be over or underweight by 2% relative to the benchmark, the all-share. Okay. On sectors, we can be plus or minus 3%, whereas before we were plus or minus 2% on stocks and sectors. So in the new strategy conviction approach, we have more latitude on sectors. And it's very much a bottom-up stock selection-driven portfolio.
How can it be that you have more latitude at the sector level than at the individual company level? In the end, if you have 2% above in all companies, the sector would be 2% above?
Oh no, if you had 2% above if you liked a lot of the companies in a sector, you cannot hold them all if you have, if you had a 2%. So it's still sensible risk controls, because that is what our shareholders have bought. And I'm a shareholder myself, as is William Meaden, my co-manager, and all the directors. But what we're able to do in terms of where we find the most appealing, the best idea stocks, we have conviction. We don't have lots of stocks in a single sector. We have the ones we find most attractive. So within the media sector, ITV is our most attractive stock. That's at an almost maximum stock overweight. In the out of interest at this point in time, we don't currently have any stocks in the UK food retail sector. Doesn't mean we don't think they're good companies. I mean, Tesco's achieved great things over the years. Sainsbury's has just delivered, was it the 36th consecutive quarter of positive like-for-likes? Yes, but what Will and I look at all times, we're looking for the valuation of shares, how those companies are delivering profits. Are they beating or missing profit expectations? And also the quality. And we haven't actually found any of the food retailers the most compelling in the market at this point in time. Doesn't mean they're not great companies, but we have more compelling ideas elsewhere, such as we've held the housebuilders, a number of housebuilding stocks. Well, we own a few, but again, it's conviction. So within that sector, the ones we have significant positions in, and we've added to over the course of the last 18 months, Taylor Wimpey is one that comes to mind. We first bought that early 2012, when it was trading at a very cheap valuation. At that point in time, the house builders were out of favour with the market. Everyone thought the economy's in trouble. The house builders, they went through a really tough financial crisis, so they weren't in vogue, and so they were trading at cheap valuations. We bought Taylor Wimpey when it was trading 0.7 times its book value, so it's trading beneath its actual asset value. We've added to that over time, because not only has it consistently delivered better profits than the market expected, it came back to the dividend list last year again, similar to ITV. A very low level, but it started paying a dividend, and it continues to deliver very strong results. And the house buildings generally they've delivered higher revenues than the market expected. They've been improving their margins, and they're also benefiting from the various governmental initiatives to try and boost house building in the UK. That
has also been in the news lately.
Yes.
Another thing that interests me about the investment trust which you co-run is the fact that you've seen, am I right if I say that you have taken out some protection through the futures market?
Well, what many investment trusts have is financial gearing. It's something which makes them different to open-ended vehicles. Claverhouse itself, it has a £30 million 2020 debenture, which gives us structural gearing. The normal, if that debenture is fully invested, our normal level of gearing, as discussed with our directors, is about 10%. But what we have on top of that is some tactical gearing through flexible shorter-term debt. William Meaden, my co-manager, is directly responsible for the tactical gearing.
I see.
And the board have given him discretion to go plus or minus 7.5% relative to the normal level of 10%. So in effect, we will be either 2.5% geared or 17.5% geared, depending on our, our view of where the stock market is valued, what the growth prospects are, and where we're finding the best ideas. What has happened over the course of this new financial year is that William in particular, was given the ability to use financial futures as a hedging. It's not for speculative investment whatsoever. It's just literally to hedge, so that if we have our debenture fully invested, we have some of the flexible debt invested as well, because we're positive on the outlook for UK equities, so we want to be up towards the upper end of our gearing range. If at any point in time we get a bit more nervous, for example, if it's due to the market, being quite extended, or we're just uncertain about, the macro environment in the very short term, what William is now able to do through the use of index futures is to offset part of that gearing, that 17.5% maximum. If we were up at that level, we're not. But if we were, he can just reduce it by selling index futures. And the benefit of this for our shareholders is that not only is it a cheaper way to reduce your gearing, but importantly, it means you're not having to sell the underlying stock and losing the income that those stocks can generate through their revenue. Because another key part of Claverhouse, which actually had its 50th anniversary this year, it was launched in 1963. But most importantly, the financial year ending 2012, it was the 40th year of consecutive dividend growth that Claverhouse had delivered to shareholders. And there are very few investment trusts that have such a long history of continual dividend growth to shareholders. And by using index futures to reduce your gearing on a tactical basis, it means you're still owning the stocks you like, your best stock ideas. And so you're still getting, the dividend from those shares, which we can then, deliver to our own shareholders as part of our dividend.
It sounds like a very good strategy, certainly. Your discount to net asset value has decreased sharply in the last 6-9 months.
Yes.
Do you believe that'll, obviously that trend will continue, also versus peers?
We hope it will do, for sure. At the end of our last financial year, the discount was about just over 10%. At the end of our half year, the 30th of June this year, it was just over 7%. And in fact, most recently, it's come down to a discount of just over 3%. So, we very much hope that Claverhouse can go back to trading at a premium as it used to, quite a few years ago, when there was consistent outperformance being delivered. Because a lot of our peers do trade at premiums. Clearly, it takes time for the market to believe that the new strategy is going to deliver the outperformance, that's fair enough.
Right. So there could be some additional upside just from that.
Well, we hope so. I mean, we're focused at all times on delivering the best returns for our shareholders. And what we have control of is the net asset value return. Right. The share price return is a matter of the market and demand for the shares. But we do hope that it will narrow. And
you certainly do seem to be meeting your objective.
We certainly have done since the change in strategy, which we're very pleased with. And we hope our shareholders and directors are as well.
I'm sure they are, and we certainly wish you the best. Unfortunately, that's all the time that we have for today.
Well, thank you very much.
We do hope you will join us again.
I'd love to. Okay. Thank you.
And that's all from all of us here at Digital Look TV in London. Until next time.